And we're good?
We're good.
Sweat Equity Podcast.
Mm-hmm.
Feeling it? Little simple man.
Why would you call me that?
Leonard Skinnard is one of the only Florida exports that's good on the ledger, on the balance sheet.
What about Tom Petty?
Tom Petty's the other one.
Are we going to play this game? Who else? Flo Rida, I think, is from Florida.
That's neither an asset nor a liability. How about that?
Oh, okay.
Yeah, I'm going to use a lot of accounting.
Oh, I just got that.
Yeah, bro. We have Scott Nelson, CPA, to the stars.
My personal CPA.
So
he knows all the secrets.
So what we're going to do is we're going to go over your tax information and see where you lied to the government.
Line by line, let's bust it out.
Let's get the sponsorship stuff out of the way.
Go for it.
Grasshopper. If you guys don't have a phone line, if you've been listening to this podcast for a while and you're one of these people that just hears the thing. I was just telling Eric about this off mic. Don't have the laundry basket that you keep walking by. Pick it up, take it to the other room. I was using that metaphor-ish in a different way. Take my own advice. I wanted to move stuff and organize around in here. Just stop thinking about it and do it. If you're listening to this and you have your own business, you're trying to act like you have your own business on a website or have this facade of a brand, you need a business phone line. You need to be legit.
The phone line is the laundry basket.
Yeah, well, putting it off, the task of it, right?
Oh, okay.
Yeah, people do hear these ads, but the thing with podcast ads is it's top funnel, as you call it, awareness.
Mm-hmm.
It's not a conversion generator necessarily. It's awareness. So a lot of people don't know that they can have a phone line that can be scalable, that you can pay monthly, that you can pick your own phone number. We were looking at them the other day. I'm pondering a 666.
I already got one.
You got a 666 number?
New dental office, Forest Hills Dental.
So you're creating that.
Oh,
good
you're talking
experience.
about no, it ends in 6666, but there's.
Oh, you got that one?
Yeah.
So
came with the building.
There was a 81866 something like that.
That's badass.
Now, we were trying to figure out, are people superstitious with that? If they go to trygrasshopper.com/sweat, they get our discount of $50 off. If we change our number on using that link, that affiliate link that hooks up the show, we reinvest in the show whenever we get paid by these. And is it going to have a stigma? Are people still that superstitious?
Scott, would you be put off by a number 666, 420, 69? What are the other ones?
Sounds very memorable.
Okay.
It's got sticking power. That's what I was thinking.
Yeah.
Right? It might be a conversation starter. Like our company's called Tocobaga. People are like, what is that? A new kind of taco? I say no. I say it's the Indian tribe that the white men eradicated in the Tampa Bay area. And then we go into a whole campfire thing about how Tampa means sticks of fire, blah, 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 blah. And here we are. But
this is like probably all that's left of the tribe.
Oh, yeah. It's that and a red ale.
Yeah, another
from
white man
Cigar
invention.
City Brewing.
Yeah.
But let's officially get the show going. After you hit that, I'm going to give you the link again. Trygrasshopper.com/sweat. We're going to put the link in the description of the episode, and then we'll put a bunch of others. What I want to do is start any referral codes I have. We sign up for a lot of subscriptions or give a lot of advice on the show. If I have a referral code, we'll try to put them in the description and start building that out for our SEO purposes too, right?
Sounds great. Can't wait.
You sound excited. Are you fired up to talk some taxes?
Accounting.
Hotty toddy. God almighty. Scott, sorry if I made you bleed from the ears there. Some people get caught off guard.
Scott, have you ever heard of that hotty toddy?
I have not.
He claims that that's like an old radio thing.
No.
It's a drink, right?
No, it's a drink. It's the call-in. Every radio guy has their own way of starting a show, right? Some people, like Casey Kasem used to have some kind of way of saying something. Corolla says, like, get it on. gots to get it on. It's like a lead-in kind of way of, instead of saying hello.
So you're telling me you chose that?
Yeah, because it was in my frat cheer or whatever you had to do. You had to do all a bunch of dorks saying that all together. Oh no, it's nerdy. I get it. And then Ole Miss actually has it as their thing as a school, like a little cheer.
There's never one for the cheers. I've never done the gator chomp.
You're a pessimistic person.
That doesn't make me pessimistic.
Some people would be excited to do it.
I just feel stupid.
You feel stupid?
The gator chomp is pretty ridiculous. Come on. And I went there, kind of.
Scott, did you go to school, man?
I did. I attended University of Wisconsin.
Oh, yeah? Badger, huh?
I am a Badger.
Ron Dane. Who else we got?
Secretly
Russell
I could do
Wilson?
this all day. Corey Clements. Yeah. I'll do it. I don't want to go down that rabbit hole. I'll just focus on that. J.J. Watt.
J.J. Watt. Yeah, that's what I was thinking.
He's a big one, literally.
So, Wisconsin, you grew up there?
I did, yeah.
Okay.
I moved here in 82.
Big drinking state, secretly, right? Milwaukee.
It's
maybe.
not secret. There's a bar in every third store.
Well, my thing with like the Midwest, when I went there, I grew up in Florida. Like, I didn't know that everybody secretly gets their booze on in the winter. Not secretly, but you got your basement, and most people go to the basement and drink almost every night.
You got nothing else to do, and you don't got to take your clothes off.
A lot of people are unemployed in the winter months, so
Oh, yeah?
they head to the bar.
Really?
Why is that?
It's 20 below zero.
All the cheese farms are shut down.
There's virtually no construction work in the winter, and ice fishing's big, where you go out on the lake and you take your little ice fishing shanty and sit out there and get drunk.
Yeah, I've wanted to do that. I want to do it more than ever now because we have 2 kids under 2. And I just
want to go out on a frozen lake inside a little shack and just sit quietly.
I just want to be by myself. Yeah, I don't need to fish.
Just read a nice book.
I don't need to drill a hole.
I'll read an instruction manual. I don't care.
Yeah, I'll go to fucking igloo just if I can get a little bit of kind of me time.
Yeah,
you know what I'm saying. So let's talk some dirty numbers. Let's talk what everybody's kind of concerned. If you're trying to do your own business, you're already kind of aware that 2018 is going to be a little bit different in the way you submit this stuff. And I'm going to preface this to the audience that we're going to try to make this as entertaining as possible because my ADD is so bad that I have a CPA and I have a business attorney, and I tell both of them, talk to me like I'm 5 because I'm not going to act like I know this. This is not this accounting is definitely not my it's something I have. It's like homework. It feels like for me to do.
Oh, yeah.
It is. I don't get excited. Some people will get. You know those guys that get like fired up about like. You had the friends growing up that every dollar they make, they would like count it in front of you and be like obsessed with it. And all that stuff. And it doesn't matter if they grew up rich or poor. You just have that personality. I need to like manufacture that. Like I like doing the work. I like getting paid, but I'm not obsessed with like how much is coming in, how much is going out. It's not a great behavior. I'm working on it. But I would say, if people read the episode title, which will probably be some clickbaity thing we'll do, that
think of accounting puns.
We're going to try to make this as entertaining as I possibly can. Eric,
I think Scott gets fired up about doing taxes, at least my taxes, I think.
Yeah.
He does like a dance, like a haka dance.
That's his hottie toddy.
Yeah.
Well, I enjoy meeting all the people. We do 8 or 9 people a day, and the contrast between the personalities between the appointments is something just tremendous. It's a unique conversation with everybody we have, and you're no exception, sir.
Thank you. Thank you. No, so, we spend about 15 minutes a year doing my taxes and another 90 just bullshitting, pretty much.
We're efficient.
Yeah.
Yeah. Well, I mean,
it's fun.
Well, so so a lot of that relationship is trust. I say with our work because it, in a similar way, the digital side of what we do, call it marketing and ops, just for shorthand, branding, whatever we're doing for clients. There's a trust factor that no matter what, our sales cycle to get someone to close, it's going to take usually at least 2 meetings, right? Part of that's we're not as big of a firm to have that name yet, but part of that's also just like I'm scared. I don't know a lot of this stuff. It's same with attorneys and CPAs when you're doing your own hustle, side hustle or whatever. It's so confusing sometimes, and it just feels like dark matter to a lot of people, right?
Well, the good thing about the CPA firms, and I think law firms are a little different, but we have a very high allegiance factor. Most people choose an accountant and stay with it. I think statistics show that the average person stays with their CPA 14 years.
Wow. So the lifetime value of a client.
Pretty much. I think the worst allegiance factor is an attorney. And basically, you hire an attorney because something has gone wrong, and most people would like to clear that issue up and move away. We have the yearly people come back. I think the number one profession in the United States for allegiance is a hairstylist. That's 19 years. CPAs are in second place.
I was in that community. I was in the salon industry as a salon suite concept franchisee group, and I can tell you, the hairstylist is definitely that. Once you find a good one, you stick with her, and even if you drive 10 miles, you'll still go. You'll go wherever she goes, and there is a. The reason is they're part psychologist.
That's true.
Yeah, it's like it is a secrets thing. Maybe the allegiance factor is just knowing all the secrets.
So the
most secrets.
That's true. I mean, but they're also what's it called? It's a recession-proof industry for hairstylists.
Hair don't stop growing.
Now a third of them are really good and can. I'm sure you've seen some of those forms come in for their taxes because it's all cash. But
he does other cash only.
Oh, we talking some.
I believe.
We talking.
Didn't I hear a story?
We talking square grouper.
Who knows which story we spoke of? There's a whole subterranean economy
Tampa
out
is
there. Many people get paid in cash only.
Yeah.
They still have an obligation to file a return.
I'm going to earmark that because
Sure.
I want a cash-based business.
Mark down subterranean. That's in the IRS manual.
Subterranean.
That means cash only.
Yep. And
Why?
For instance, the produce market. And I know Ybor City here, where we're at, they have a lot of produce markets. It says right in the IRS manual that's all cash.
Wow.
Restaurants, they pay for all their produce and bakery on a cash basis.
How do you feel? Do you think cash is going to go out? Do you think it'll always be here, kind of thing? Because everything's going more digital.
Well, I don't know. I'm old school. When I started out, we didn't even have computers. We didn't have a fax machine. But if cash goes out, there's going to be something to replace it. But, I think artificial intelligence would pick up on that. And I don't think it would be the same as an all-cash economy.
Yeah. Well, yeah. Oh, how about the question we had a while back?
What?
Federal Reserve. And we were looking up.
It's not really a question.
Federal Reserve is, what do we say? IRS is part of the government.
The question was, is the dollar backed by gold? And I tried explaining of the Nixon tax. What was it called? It has a weird name. It doesn't matter. Where they switched over to non-gold standard. I guess it's just they consider it backed by the full faith of the United States government, right?
Yeah, that
There's no more gold.
After a long time. Now gold went away. Gold standard went away.
You wouldn't believe how many people I had to it was an argument, but I don't know why. I mean, it's on Wikipedia. Did you find it?
I'm on Investopedia, but that's going to be a lot of reading.
There was some. It's got a weird name. Nixon Tax Act.
We'll look it up. So, 2018 tax changes. I heard? The one I know off the top of my head is meals and entertainment is gone, right?
It is gone. You can still.
It'll find a new home in a different
It's
deduction.
Okay. It's okay to give your clients a ticket to the hockey games. There's nothing wrong with that. It's just not going to be a deductible item on a tax return anymore.
Okay, so I never understood how that used to work, because I'm only asking what happened before, because there's probably people that don't know what deductions. I'm trying to figure out the difference for people from last year to this year. So,
Sure.
Let's say we're a client heavy business. And we take enough entertainment, so we take them to, let's say it's $10,000 a year to entertain clients or something like that. How does that work out? And most of the time, I know this is tough because you have to know revenue and all that stuff. But
it's not tough at all.
What can you write off?
I think in answer to that question, you have to really talk about what would happen in the event that you were asked to substantiate that.
What does that mean?
That means what if you got audited?
Okay, right.
You can do anything you want. You can put anything you want on your tax return, but when we talk to clients, we have to talk about if you were selected for audit, what would hold up.
Right.
In regards to entertainment, meals where you're taking a client out face to face and you're sitting across the table, and that's still going to be deductible. That was deductible only 50%. It's been like that for 50 years. Okay, but the big change in the new tax rules is that client appreciation events are not deductible.
Do you know why? Like, was there something where it's like, where you set up a these bigger guys will set up a nonprofit to really pay themselves kind of stuff?
Well, the whole thing was negotiated in this new tax act, and we have substantially lower tax brackets. So certain things had to go away as a trade. And, everybody thought that entertainment-intensive businesses, that was kind of a perk that not everybody got to go. So in order to be fair, what's happened is that they just made that non-deductible, and in lieu of that, they've given you some new deductions or some new standard deductions that would more than make up for it. So, the hockey tickets, the client appreciation events, things like that, that's just not deductible more. But if you want to do just a little twist, a client appreciation event isn't a deductible expense anymore, but a client education night would be. If you had a guest speaker that it was an educational purpose, you had a motivation there, and you invited the clients to give them something of substance, and you served dinner, that would be deductible.
So if we put the podcast on live and had people over here for a party, that's technically, this is an educational show. I mean, it isn't all dick jokes. It's heavy, but it's
the
not.
dick jokes are educational as well.
Right.
Anatomy and whatnot.
Right. And we're showing you how to podcast, how to get that voice out there.
Well, now you're getting closer to something that would be educational. If you're showing them how to podcast, but if you're just telling jokes and
every episode is every episode is titled "How to Do Something," and
that entertaining clients when you come in and they actually show you, I would think that would be a deduction. If they sat here and you gave them a meal,
what if they were in the other room and it was just kind of broadcasting in that room? I'm thinking of just odd scenarios that we could work around.
From a substantiation point, number one, you have a recording of the show. That's really good. You're going to have a guest list. You're going to have a syllabus of what the topics were that were discussed, and that's probably a long way toward meeting the objective substantiation for an audit.
Maybe writing down some meeting minutes. I've got some Nest cameras hidden around here.
I don't think you need to write it down. You got it on video, right?
Toilet cams.
That's perfect.
There you go.
Yeah.
IRS.
Oh yeah. Upskirt shots, all that stuff. We've got it everywhere. This is a nerd factory in here of creepiness. No,
but if you had somebody, if you had 10 people in the other room, it looks like they were having a party and weren't even listening to that. That wouldn't really bolster your case for deduction on that.
That's true.
They could be undercover IRS agents.
I was just thinking, like, what if we had a party in here and it was just the podcast had to be going on to be able to party? But just kind of thinking out loud here, scenario wise. So I'm guessing what happened is you would say you're entertaining a client and go spend on stuff that you already were going to spend stuff on. Like, I appreciate the high ticket client. I appreciate him so much. I'm going to get the company a boat. And then he takes you out on said boat.
And now that's his boat.
Right.
And you can do that.
Yeah, that's
it's
a
just
gift,
not
right?
deductible.
Okay. Yeah, you can do it. I want to know, I guess I'm asking in the deductible format of sorts, because most people see it I feel like they see it that way. They're trying to figure out what they can do without really pushing the line, right?
Fishing trips, taking your client to the NASCAR race, things like that, that used to be deductible. It's definitely not under the new rules. In fact, there's really no place to put it on the tax return. They've just eliminated that entire category.
Interesting.
Hey, I'm all for that.
So
Make that form shorter for you, of course. I ain't touching it.
That's good. Any other things like other entertainment examples while we're still on this?
Well, you mentioned new deductions. You said there's a new standard deduction. I know what that means, but for the people who don't know what it means, could you explain that?
Sure, but let's just do a little background. I mean, we've had the tax laws since probably in the 20s, and we had one tax reform in 1984, and since then there's been no major change in the tax laws until this year. And now we have something known as the Tax Cuts and Jobs Act, and it really is sweepingly different. The good news is that for everybody, and I mean single people, parents, every income category, you're going to be paying less tax, substantially less tax. It's a tax cut. And so if you read the bill, we're a small accounting firm. We probably have 400 or 500 corporations that we serve, and we probably have 1,000 individual clients. But when I read the tax bill, really the tax bill isn't about businesses of your size or my size. It's about for the major corporations. This was developed in order to, number one, cut the corporation rate on the large S&P 500 companies, and that got cut from 35% to 21%. That's substantial. And then just at the end, if you read the bill, there's over 1,000 pages on corporate tax reform. My partner and I, we have a hard time reading what it is. A lot of it's about repatriation of money that was earned maybe by Apple overseas. Now they're bringing it back. But almost as an afterthought, in December, in order to make this politically palatable, they introduced some tax reform that would affect small businesses and individuals. And this all happened in the last 2 weeks before it got passed. So the most sweeping change for every family is that they've expanded something known as the standard deduction. So the standard deduction for a married family, I'm just semi-quoting on this, it was $12,800 in previous years. Now it's been expanded to $24,000. That is substantial.
Sure.
And the other thing that in regards to most families is it really is good to be a parent. The child tax credit, if you have children, has been expanded from $1,000 to $2,000 per child. Excuse me. So,
Still not having another kid.
if you have a family,
I'm getting snipped.
let's supposing that you have a family that maybe you just you're young guys and you're starting out, and maybe you had 2-3 kids, and one of the spouses has to stay home to care for the children, and the other spouse works. That spouse earns $60,000 to $70,000. They're not going to pay any taxes at all.
Wow.
So it really is pro-family.
Well, it's because that they're staying at home watching the kids.
Correct.
Okay, I have a good question.
Yes.
Real life example. I'm technically on the payroll at my wife's new office. Should I have done that?
Yes.
Okay.
Why?
Well, if it's a matter of, I don't know, I guess the money itself would be way more on our side if I'm getting paid, but I'm just saying for the tax deduction of the child, because if I wasn't on a payroll or, an employee somewhere, you used to not be able to deduct it because you're supposed to be home watching the kid because you don't have a job. Because I was sending my kid to daycare. So if we're writing a check every month, before, if we were both working, you could deduct it, right? And
that is correct. No, you still can. You can still take the child care if both.
You're saying it's more now?
Well, no, that was a dependent care credit for children in school. What I'm mentioning to you is it's a child tax credit, $2,000 for every child on the bottom line. Take it right off the top. So that's real good. But your questions, it's a great question, but what everyone wants to do immediately is they take this tax law and they want to apply it into their own personal situation.
Of course. We're all narcissistic.
Show me the money.
That's why you're on the podcast, so I can get free accounting advice.
My understanding is, and you are a client, that your wife just opened up a dental practice, and the question is, should you have been on the payroll? Well, there are pros and cons for that. First off, you are paying into the Social Security system. That's good. The best part about that is that if you you're in an accident or something and you became disabled, if you don't contribute to the Social Security system, you may not qualify for Social Security disability. So if you're hurt in a bad car accident right now, you would have had to contribute at least 9 of the last 16 quarters in order to be currently eligible for Social Security. So that's a good benefit. But I can tell you some different wrinkles in the new taxes as it applies to your dental practice, and too. There's
Go for it. Hit it.
Well,
You're getting fired up. I like it. I see it. I see it in your eyes. You're very calm.
Let's go. You guys, I know we're here to talk about startup businesses and entrepreneurship, and I'm all for
We talk about whatever business-wise, but most people don't know anything about accounting.
I'm going to apply this to the dental practice, but let's go on. Right at the end when they were passing this tax bill, I was really shocked that they even passed it. They really didn't have enough votes, and because he was from Wisconsin, his name's Senator Ron Johnson, said, he says, I'm not really in favor of this tax bill because he said we're giving all the breaks to the large corporations like Verizon or IBM. He says, and yet I have so many people that own their own business and they own it in the form of a partnership or an LLC or a subchapter S, and where's the tax break for them? Because they're incorporated, they're just not as big. And at the last minute, they created something new. It's called the pass-through deduction. And what that is, it's a 20% off sale. Is that when we would calculate, I think most of you guys are either LLCs or subchapter S's, after you calculate your business income, there's a 20% deduction that you can take off your bottom line. So if your company made a profit of $100,000 and we're all done with your taxes, wait, there's one more thing. We have the new pass-through deduction. You get 20% off of that too.
Just flat across the board for no reason other than
across
politics.
the board because it
Making under.
It was a concession towards small businesses.
So if your revenue's under probably $100 million or something, you qualify as a small business that does it, that can do it.
You do.
Yeah.
Now, thank you. You're getting into the detailed questions already.
Well, I kind of obsessed of like how we anecdotally describe small business, right? Some people think it's that local gas station owner.
Yeah.
Some people think it's kind of where we're at in a white collar kind of like soft skills kind of thing. To me, we're in the micro area, maybe nano. If you go,
Exactly.
if you do, I kind of use the index funds kind of ranking because that's where I came from. So we're in that area. But if I go around saying, "Hey, you got a micro business," like that's gonna, it almost sounds insulting
It
for
is
some reason.
insulting.
Well, because
Unless
people
it's
think
micro machines.
you especially insult the guys with micro penises because it's like, come on, man, I'm already having a this is a tough time already. Like I can't. I don't
Probably
satisfy
shouldn't use
anybody.
that word at all. Just don't even use the word.
Well, but the definition of a small business is anything other than maybe a Fortune 500 company. That's what they were thinking of when they passed
Which
the
is
rule.
90,
That's insane.
99.97% or something of
So
companies.
there's very large companies that are owned in a partnership or something, and those rules apply just as if you were a single plumber driving around a service truck.
Right.
You get that same pass-through deduction.
Which I would call local. I have local, nano, micro, small. That's how I kind of describe it in my head, but I know that doesn't really apply to real life.
That's true. Now, that pass-through deduction, there are certain exceptions to that. For some strange reason, there are 4 professions that can't fully get that deduction. And I really don't know why, but here are the 4 professions. Number 1, doctors. They don't get it.
Why?
It's just in the law.
Because they're already living a good life, you know.
Okay.
What do you need?
No, they've got a tough gig because they're constantly jerked around between health insurance stuff. I'm talking.
Right.
I'm thinking of the general practitioner, your doctor. If you're listening,
absolutely.
you know, I'm thinking about your guy that has 17 ladies in the front office. I don't care if that sounds sexist. It's just like it's
Pretty true.
administrative.
It's
At
true.
my place, there's 8 Cuban ladies that once they went to a premium kind of general practitioner, whatever, they made a partnership with one of these umbrella companies that are coming in and taking these over. You pay $5,000 a person or family, and you get better. You can go in whenever. He'll go to your house, kind of thing.
Concierge medicine.
Yeah. And so you can do that. And now there's 2 ladies in the front desk. And they're like, oh, yeah. The guy came in and he was like, we didn't need all this paperwork and all that. I was like, I've told you guys that. I can't help it.
Well,
I can't help but consult every time I go somewhere.
In regards to the medical practices, I think the reason that you see all the consolidation is because they need power in order to negotiate with the insurance companies for a rate. And if you're a sole practitioner, you're not going to be able to
That's
do
true.
You just take what they give you.
Yeah, because what happens, I guess you've done some doctor's offices. My wife's a data analyst in the healthcare market. And she's kind of explained to me that, like, it's kind of a guessing game what you're charging in a way, which is insane. You use, like, Medicare as like a starting off point, but it's really tough to try to nail, like, who owes what. So it's like a constant back and forth of like cash flow issues, right?
Correct.
Because you're always trying to guess, which is insane to me. Like
Well,
that's a
and
bad system.
If the doctor loses the insurance coverage, he won't get paid for 4 or 5 months, and a lot of small practices have to go into temporary bankruptcy in order to wait to get paid.
Yeah. So that what
It's impossible to be a sole practitioner doctor.
yeah, and it got harder. I guess the Obama era. I just remember a lot of people kind of saying that doctors' offices are going to have a tough time. When Obama came in office, I didn't know what they were talking about because I was like, whatever. I'm 24.
Was it an Obamacare thing?
I don't. It may have been, but I don't think so. I think it was more in this area, but it was people hovered around that Obamacare stuff.
My opinion would be is that there was a tremendous consolidation in the last 15 years to where the insurance companies and the hospitals, they all want to become one, and they start buying up medical practices. If you become ill right now and you check into a hospital, your doctor's probably not going to visit in the hospital. You'll be assigned to a doctor that's employed by the hospital. He's your, I forget the term, he's your medical specialist. He's your specialist you've been assigned to.
And it's just, and I'll let you do the other ones. It's just so weird that now the folksy kind of general practitioner is really, has to deal with this kind of shit. And then, you want your doctor to be the best doctor, right? And that's why they're not good at the business side of things. That's what I've talked to them about most of the time. Dentists have a little bit better acumen, I feel like.
Scott would know. He's got tons of dentists.
I have tons of dentists.
I feel like I feel like general practitioners those kind of doctors, not specialists, play a little fast and loose. I'd say a little bit more instinct kind of based, more than I feel like dentists are so precise, orthodontists so precise that position's like an assassin.
Yeah. Well, they have to be
like a sniper. Yeah.
Kind of wonky jaw.
But for a starting medical doctor, there's so many impediments to starting your own office that you just can't do it.
Yeah.
You're going to have to rent an office
on top of the student loans.
And you're not going to have any insurance reimbursement. And where are the patients going to come from? And they'll go broke before. So what you do is you join a medical group, and they have the insurance reimbursements, and they have better benefits, and you don't have to deal with the personnel issues of hiring your first nurse and things. And there's just aren't any medical students coming out and starting their own practices. Just doesn't happen.
It's crazy. I feel like
they don't want to either. They know that.
Yeah, I'm always on the entrepreneurial side, so I'm always like, I just feel like it stifles innovation somehow. But
it does.
It could also breed more innovation if you have pooled resources. You can make a case in that direction. But I'm a contrarian to my own point. But I'll let you finish.
We've talked about that before, where it's like not the worst thing for somebody coming right out of med school, whatever, to have a place that I can always go to this corporation if this doesn't work out with this person, sort of thing.
But I cut you off and went on a tangent. That was point 1 of 4.
That was 1 of 4.
That was 1 of 4 professions.
Yeah.
Okay.
All right.
So I all love our medical doctors, and I think they do a great job, and they have altruistic. I mean, they have a purpose in life. So I don't know why they don't get the tax benefit.
They feel like firefighters.
The second group that is denied full access to that special deduction are attorneys. I guess we don't have to talk anymore about that, right?
They don't deserve it.
I love attorneys.
Greasy attorneys.
But they don't have.
I don't love the number going up of attorneys, but
they don't have the social purpose.
Really,
that a doctor has. Attorneys don't save your life, and of course, the reason that Congress doesn't like attorneys is because they sue people.
And they're all attorneys,
right? But they were all former attorneys.
Right, and some of the
they know
they just have a bad reputation for some of the large settlements, the tobacco settlements and things. So Congress said, well, we're not going to give that deduction to them. So I love attorneys too. I have plenty of clients that are attorneys. I thought we'd have more attorney jokes. This is the last opportunity before I go on here.
I don't have stock attorney jokes. I just kind of play it as it goes. I know there's a lot out there, but I grew up in a house. My dad and all his buddies are all attorneys. Like uncle's an attorney. I grew up all around this. We're trying to. We will do this one day. Do this sketch called Social Attorney, where we do everyday fights, and then you have your social attorney come in and go, no, what my client was saying was you didn't fill the dishwasher correctly because he looked it up online from the manufacturer.
Right.
You do it in your own kind of way, and that's okay too. But my client can't articulate this because he's hungover. Like that. That's kind of the sketch. Not a lot of laughs from you, but we'll beat that out a little bit.
I know what I didn't do.
Right, but attorney.
I like it.
Attorney, but I've talked about doctors and attorneys on this show throughout the years, and the problem with their professions is the mindset's still not business oriented. So when I talk to attorneys, I go, "You're the businessman first now, attorney second. You've already had the experience to get to here, to where we're meeting. So you need to think like as a businessman first. It doesn't mean you can't be a bad. It could be 1A, 1B, right? Priority list. But you still work on being the best one. That's how I think about it too. I got to be the best kind of general business administrator for this company. Then the specialties I still keep working on, right? So I can project manage a lot of specialists.
Well, technically, attorneys are advocates for people, and that's
What does that mean in a
that means that if you're going to sue somebody or you're being sued, again, you need somebody to represent you, to advocate your position. Once you have a legal problem, you have a problem, folks.
But it's
The realest of real problems.
Are you saying the position's almost as a luxury, so it doesn't need to be taxed? So like,
Well,
you get an attorney if you need one.
I'm just saying that Congress are predisposed against attorneys because of the large legal settlements, and that raises the cost of everything, and therefore they're just not a well-liked political group. By the way, I would have to say that most law firms advocate toward more liberal causes. Because there's malpractice limitations, and that was all voted on by the last few years. So, by and large, I think large law firms donate toward more liberal causes. Most accountants don't talk political parties here.
You mean donate?
Yes.
So, but that's more of a PR move, right?
No, it's because they want to keep control and make sure that they don't have further curbs on class action suits.
Yeah, they want to be able to.
Okay. Yeah,
they don't want to hit it. They don't want to have a ceiling put in. We can only sue for this much or whatever.
It was very feasible. They didn't have to talk long in Congress to make sure that the attorneys didn't get the special deductions.
Interesting.
The next group that doesn't get that special deduction are accountants, which is very obvious because
You'll just work around it.
well,
anyway.
if somebody sues somebody, you need the accountant to basically monetize or say what the damage would be. We are the numbers people. The attorneys are the oral argument people. So I get it, and we were basically class. So we do not get the privilege of that deduction. And the fourth and final, which is an odd. Well, let me first say there's a few people that mostly it was directed toward licensed professionals.
Let's guess this one. You got to guess?
But there are a few licensed professionals that do get the deduction. And those are architects and engineers because they build things.
I was going to say
They do things that
building construction.
are tangible, so they get that.
No, he's saying they do get it.
And the fourth, yeah, they do.
They do. Oh.
And the fourth and final occupation, which I don't know if you guys will get. You want to take a guess?
Lawn service.
Oh, no, they get it.
It seems, if I'm going on a trend of the three, but you're saying this one's a little bit askew.
This is different.
Prison companies.
No, they get it.
No, they get Matt hooked up.
I'm just kidding. Of course they could.
I would say a doctor's, attorney's, accountants. So that's the pattern, but you're saying it's not. It sounds like it's not in there, but I'm going to try to stick with that pattern of white collar, what we call super professionals. I'm going to go insurance.
No.
Damn.
Realtors.
Really?
I don't understand. Totally different classification than the other three that don't get the pass.
Are we still good on here? Okay.
I think so.
I see the video glitching.
I know.
A little bit. So realtors, because that's a tough gig. I think people think being a realtor is easy because, a lot of people can see it as a backup kind of position. Do we want to pause and come back?
It already did that for us, I believe, but it's still. I think
we're still fluid.
We're good.
All right.
Who knows?
Yeah, it'll be good. Do we have a backup going? Do I need to throw that out there?
I don't know.
I'll throw it out there. But realtor is a tough position because realtor now, the way I look at it is, you used to have being a realtor before Zillow and all the sites came out, all the open source information online came out, let's call it the last 15 years, where you can go to a cocktail party and then look up the person's house that you went to. Who does that? Me. Because I just want I'm very curious. Yeah, I think most people secretly do it. But I would say your realtor was awesome. Most of their job was to get that information. They knew of a house
gatekeeper.
coming. Yeah, they knew of a house coming out before everybody else, right? Or they knew of something going out, or they had an exclusive on it. And now it's just it's crazy. But I feel like the number of realtors has gone up as, and I'm not dogging anybody who does it. You can be a very good realtor, but they probably know this as well. Just like a hairstylist, there's a third that are really good. There's a third that just kind of make enough for them, and there's a third that are just garbage. And some people see both of those as like a fallback kind of position. I don't know if that has anything to do with why they're not on this list, but they don't.
It's probably some congressman hates his realtor and had to have that in there to screw over one guy.
Yeah, you think that's it?
Probably.
It was a negotiated thing at the last moment.
See?
Now,
Scott agrees with
before
me.
we get off on that one, I just want to say that the four groups that we talked about again, which were doctors, attorneys, accountants, and realtors, they do get a deduction.
It's 30%.
It's phased out now for those people that make a lot of money. It's totally phased out at $440,000 worth of income. But there are certain deductions where you can take up to 50% of the W-2 wages that you pay. But a lot of realtors don't have employees. They just work by themselves. In defense of realtors, every realtor will tell you why you need a realtor, because we negotiate the price. Without negotiation, we justify our service. So
Yeah,
that's enough on that one. I just wanted to get that in. That's great for entrepreneurship. I'm all about people starting businesses from nowhere.
No, and that is the realtor's value, is to basically talk to everybody for you, because you don't want to do it and look through contracts. That's what ours did. That was very good. I think they're kind of quasi. They're not real estate attorneys, but they are quasi contract. It's like a middle ground between you and the really looking at the contract professionally.
You got so much other stuff going on. It's nice to not have to worry about that one little thing.
So what else you got?
Well, I do have one that I think is important about the new tax law, and it's called the elimination of state and local taxes.
The Illuminati?
The elimination.
Elimination. Sorry. I
We
wanted to hear what I wanted to hear.
We live here in the state of Florida, and the state of Florida does not have a Florida income tax.
Mm-hmm.
So the people that live in Florida, they take their property taxes, and presently it's gone now. We used to get an allowance for sales tax that we might have assumed to be paid while we're here in Florida. In other states, I mean, I have relatives in New York City. I have a very successful cousin that's an attorney. She works in downtown New York City. I don't know what she makes.
Let's pause for a second.
What just happened? It's still recording. It says it is, but who knows?
And
What minute mark you think we're at?
42.
That was at 42?
Okay.
All right.
And we're there. So
Yeah.
So
We'll keep it all in.
she works in New York City. I think she makes well over $1 million, and she pays New York City tax. She pays state of New York income tax, and she lives in Greenwich, Connecticut. And she probably pays who knows what. She has a very nice house in Greenwich, Connecticut. Her property tax has got to be at least $50,000-$60,000. So on $1 million salary, she's probably paying $200,000 or $300,000 in income tax. Under the new law, state and local taxes, including property taxes and state tax, are limited to $10,000.
Oh, that's pretty cool for those rich people.
So she's losing a deduction. I don't know what she would pay, but she probably deducts $150,000. Not anymore.
Huh.
And consequently, in this high tax states, this new tax law is not favorable for wealthy people.
Oh, okay.
What do you mean? How so? Because
Well,
scenario.
If they were deducting on their income tax, deducting unlimited $150,000 in state income tax they pay.
Sorry.
I heard it that way too. I heard it the wrong way.
I was thinking.
Now they're limited to
Okay.
$10,000.
We heard it as a cap.
On their federal income taxes, they're deducting state and local taxes that they're okay.
It also has an effect on how the state tax returns collect tax, because most of the state tax returns are derivative taken off the federal return. You do your federal return first, then you do the state income tax.
Wait a minute. Hold on. Let's because now if I'm listening to this, I'm trying to get in the user, the listener head. So let's call it like a one of those Russian nesting dolls. That's what it kind of sounds like right now. So you have your federal tax, that's the big thing, and then what you're saying with what you're just talking about is you used to be able to take what you're paying in the state, local, apply it to your federal. Because so if you're not in, let's call it not Florida, Texas, because that's state income,
right?
Free. Some call it sanctuary states. Well, that's why. And we got better pill
We get
mills.
all the best hobos.
But say you're in a more liberal state, Massachusetts probably, or New York. You have such high taxes that you should get a deduction on paying those state local, right?
You used to, not anymore.
Okay. And then now what you were saying is it splinters off how they receive it, how the government receives it.
So what happens is that if you're in, say, state of Massachusetts, you'll do your federal tax return, and then you'll do a complementary Massachusetts tax return, and that's based upon your federal income tax. So that means that all the states that have state income taxes have to revise their returns, and it's caused almost a constitutional crisis in those states because they can't redesign their tax system. They're not going to collect enough state tax. Here's a good one. State of California. If you earn over $440,000, the combined state and federal California tax is 59% on anything over $440,000.
Ooh.
59%.
My theory is California. So Florida's crazy on the outside. I've had a running email for 7-8 years with my buddies in LA. My because they'll send me an article. Guess who fucked a dog in Tampa? And you're like, that guy's not from here. He's from Ohio, and he's on opiates, and he moved down here and likes dogs. But like, I feel like Florida's crazy on the outside. I feel like California, especially in all the tax code stuff, especially LA where I used to live, it's like almost got like a mental disease internally. Like I think it's eating itself.
It is
alive, and corporations are definitely leaving. You're seeing a lot of people move out of there, like manufacturing for sure. They're going to Texas, Tennessee, wherever they can. Car manufacturers, you can easily look at that.
Well, we're seeing a lot of venture capitalists that are moving to Tampa, and they're moving from Silicon Valley to here, and they're basically, so why would we want to stay out there? The taxes are high. We've got a good airport here. We've got access to water. And the tax and the cost of living is just dramatically different than, say, San Jose, California.
I would agree. And San Jose was bankrupt in the crisis like 10 years ago because they gave too much pension funds, right? Mm-hmm. Like Stockton, San Jose, kind of that mid-upper Bay Area kind of corridor. A lot of them had pensions that ballooned up. If you're a firefighter, you could retire at 50 or something like that. And like but your retirement plan was like insane. Like you made mad bank. Now I get it. Like you're a firefighter, you're a cop. There should be a little bit more. It should be skewed a little bit more.
Yeah,
because you have a dangerous position. But the people who do underwater welding or high rise kind of construction or just construction on the road, any of that stuff. Still really dangerous job.
Yes. Ice road trucker.
Sure. And like that's not really seen in the similar light, I guess, because we don't really think about them day to day. But yeah, I would agree. California, one of the reasons I was leaving is just like I'd sit in traffic, and this relates to taxes. It comes back to that. If Tampa has anything I really dislike, is we have a traffic issue that we don't want to really attack. The Tampa Bay area, I think we're 18th in metropolis population and top 5 in metropolis like traffic or something like that.
Traffic anger score.
Yeah, something crazy like that. I do feel like being angry in the car, it does affect you because as you're driving,
yes,
I do a joke on stage. I have to see the face of the person that's going slow in the left lane. I have to, but which is arguably more dangerous because I have to floor it to go see them.
Completely irrational, but you got to do it.
But I got to hate their fucking face. Now, I feel like a lot of people have this driving anxiety, and I feel like that's palpable if you times that by as many people. I feel like it has such an echoing effect, ripple effect. And my thing with the way tax money is spent, property tax money for here, I wish it was just a little bit more transparent in that kind of way. And I wanted to ask, like, why isn't the IRS or why isn't all the why isn't there more transparency? I guess I'm going to probably answer my own question to give you a minute.
He'll get to it on his own.
To get you a minute to think about it, but like, why don't we have more transparency with like, here's exactly where each dollar that you pay in taxes goes to. If we're having to be transparent with the government about what we're making, or as much as most people do, they're as transparent when they're paying their taxes. Why isn't that reciprocated with like, okay, for every dollar we spend, 13 cents goes into education, the 10 cents goes into the roads, and made it. I know the other part is it's not easy to interpret tax codes, and this probably is transparent somewhere, but I don't think it's easy to digest.
I think in theory it is technically doled out for different things, but there's so much money going around that even if it's doled out, they take that extra 10% of it. Maybe it's only $10 million that go in from the federal government, which is nothing to them. And just put that somewhere. The amount of cash that they've lost, like in Iraq and Afghanistan, is mind-boggling. Like plane loads of cash that it's like, okay, well, that's coming from taxpayers. So I know, even though they're just printing the shit anyway.
Why it's not there, because it doesn't incentivize, right? Why would you want to do like a one-page flat tax? I know Ted Cruz is kind of an asshole, but he did have a good idea to have a one-pager to do your taxes. Yeah. It should be a flat rate.
We shouldn't even have to do our own taxes.
But you won't do it because...
sorry, Scott.
You won't do it because it doesn't incentivize. It's not an incentive for that side. It's only on the user side.
Yeah, why would they change? They don't need to change.
So
they got all the guns.
And it eliminates the people who govern the tax code, too, because that eliminates their whole...
job.
The whole
bureaucracy,
sector.
The whole thing.
And so that was a long-winded way of asking a question, but
what was the question?
It's more about why isn't there more transparency, or do you think there should be more transparency with all this kind of stuff? It seems like you've got opinions. You're trying to be very, I think, professional and not go.
If I might,
if we had a couple beers,
let's talk about county taxes first. That is totally transparent. If you get your county tax bill, it allocates per fund and how much of each percentage is going to the school fund, to the property tax fund, the superstructure. It's totally transparent. They publish the county budget. That's fine. From a state tax point, we don't have state income tax.
Yeah.
We have sales tax, and I do believe the state publishes their budget, and they publish what they spent on, and there are surpluses. From the federal standpoint, we've run such a deficit in such a long time, and some of our spending as far as defense is a classified matter, but we're not raising enough taxes in order to cut that deficit down. In fact, you guys are all buying houses right now. Have you noticed that the mortgage rates have gone up? One of the big reasons the mortgage rates have gone up is because we've had a change in interest rates. The interest rates are basically determined by the Federal Reserve Board. And what they do is they try to use that to cool off the economy or to incentivize the economy. Because the economy is good right now, they're raising interest rates. But another key determinant of interest rates is that the federal government has to sell their debt. Every week we have debt that comes due, and we have to re-auction that. And what's happened with this new tax bill is that the rest of the world, the superpowers, China, Europe, they all believe that in the long run, under this new tax bill, that we're not going to be raising enough revenue to where it's going to cause heightened deficits, and from 10 to 15 years from now, we're just not going to pay our debt. And consequently, right now, they're asking for higher interest rates, and that's why your mortgage rates have gone up.
Eric, you got a nose whistle. That's killing me.
Do I?
Yeah. A dad nose whistle that I could hear.
That is dad when I don't even know it.
Yeah. Well, I want you to listen back. It might be my anal kind of
sure?
ADD. Yeah, dude.
It was very serious.
I did deductive logic here. So, what's it called? Okay.
I'm not moving.
I always felt like I grew up, and as soon as I knew what debt was, we were already $6 billion in the hole. So it's mostly an imaginary number to, I think, my age and younger. I'm 34. Eric and I, it's just been there, and I don't even know who we owe. We're who are the bookies? What's going on? Who's going to shake us down? China, I guess. But it's all in the ether. I feel like that's the weird thing as just an everyday citizen is we owe someone.
Well, we were talking off air before we got started about is the U.S. currency backed by the gold standard. No, it's not. There isn't gold for all our dollar bills. But the federal government doesn't even print money anymore. They have Federal Reserve Board meetings, and they do new target rates on how much they're going to loan the banks, and and the bank puts that money out. They don't even print the money anymore. It's just a resolution, and they raise the amount of money, and they could go upstairs, and then it's allocated to the Federal Reserve banks. There's not even no printing of money anymore.
Yeah. I'd like to.
It's just a committee meeting.
I like to tell people on stage, broke. This is what I was really broke. But I tell people, is anybody else broke in here? And I want to raise your hand, and it'd be like the whole crowd. And it's like, yeah. Well, this is a free ticket show because I got no juice. I'm not bringing anybody through the door. But the other reason is like, and I'm like, good. That's the most American thing you can be doing. We live outside of your means. Yeah. Like that's what it takes to be an American. Because we literally grew up in this philosophy of like, okay, as soon as you know what the federal kind of debt and all this stuff is, it's like,
oh, they're doing
cool.
it too.
Yeah.
What's going to happen?
Feels like things are running on time. Things. Other than a Spirit flight, everything goes on time and is okay usually, and the economy works. It feels like economy's better than ever right now. I guess.
Apparently, I ain't seeing any returns on that, but.
Well, unemployment's like the lowest it's ever been in like 40 years or something crazy like that.
That's correct.
Trump's going to take a lot of credit for that, but I don't think that's how it works. But I'm running out of steam. But I was going to say like, fuck.
One last thing I wanted to know.
Yeah,
about.
Sorry.
Bitcoin.
Yeah.
What's the deal? What should I be doing if you have Bitcoin? And you make money, and you're not making any money off of it, can you deduct the loss off of Bitcoin?
What
can you do?
You have capital gains and losses tax, right? Yeah, son.
Bitcoin is a form of investment, and you can take you're obligated to report any sort of what we call a realized transaction. So if you take a position in Bitcoin and you make money on it, you sell those coins, that becomes a capital transaction that you're going to report on your income tax return. Likewise, if you lost money during that, you can take a deduction, but you can't take a deduction on the appreciation of what you hold.
Right.
What does that mean?
That means if you bought $1,000 worth of Bitcoin and it went up to $1,100, but you didn't sell it, then it's not on your tax return until you close your position out. A lot of people everyone here in the United States are immigrant families. A lot of people have foreign bank accounts in India or wherever, and that's okay. It's legal to do that. You just have to report it. But sometimes, like in the Indian currency, the currency goes down 14-15%, and they go, "I would like to take that deduction." You can't until you close the position out.
So I've got other side of that. That sounds like when you go, went up to 1,100. It's to me that sounds like the guy. How was the poker game? Well, dude, I was up.
Yeah.
And then I
kept playing and
went out. Or every Vegas trip, the guy will tell you how much he made to. Oh, dude, I was on a roll, and then. John came over. He cooled the table down, and fucking lost $5,000.
Yeah, I got friends like that. It makes me want to beat my head against the table.
It's every friend. It's everybody. And if you're not saying it out loud, you're thinking in your head.
I say it to their face.
So the other side of that is we pay a lot of freelancers here. I try to independently contract as many. We're an S corp with a holdings company. And with feeder LLCs eventually. That's the idea, is to run like that. Ooh. We're still recording. It says.
Still recording. I don't know.
I'm going to keep going.
We're right at an hour, anyways. But
so that's how we're set up, and I got my accountant and attorney together to help walk me through all of that. Because here's the thing: the lesson I have for people trying to do their own business, especially if it's kind of soft skills like ours, is you really need to get on the same page with legal and accounting because they're so intertwined. That you need to make sure that one hand does the other. And now I got them together, and they're kind of referral partners, and they help each other, which is awesome for me. It raises a comfortability level, a trust level too. I would say I pay freelancers, independent contractors. I don't want to hire anybody until we have to, but we pay them in Bitcoin, and I don't know how to. There's marketplaces that only take it, or people that you use that take it. I'm not sure how to declare that because I did an extension on my business taxes. But is that an issue paying in Bitcoin? And say you pay employees that way eventually, full time.
Well, that's cutting edge. I mean, I'm sure the IRS has regulations out on that, but the first thing you need to know is that if you pay an independent contractor over $600 a year, you have a reporting requirement to report that. Mm-hmm. So first thing you're going to have to do is you're going to have to convert that Bitcoin. What was that worth in U.S. dollars?
Oh, Christ.
That becomes
to go back in time.
Yeah,
and
it becomes a translation matter right there. And it's going to be a very technical process. I mean, there's like 21 common law tests whether the person was an employee or not. But really, on a practical basis for a small business, it's going to be the reporting problems at the end of the year. Should I have sent that person a 1099? Should I have sent them a W-2? And that can be you're going down the wrong avenue real quick.
I can't even get the person. Like it's done in a marketplace it's technically anonymous. Some of the stuff is anonymous work that's being done as a deliverable for us because it's digital. Some of them don't want to have their information out there, but they have a pseudonym username on like Upwork or something, right? They make a fake kind of profile. It's them. They're doing the work. I'm paying them like I would any independent contractor that's physically in here.
But the payor is going to have certain obligations to report that to the IRS.
Yeah, that's on them. And
that's on you.
That's on you, buddy.
I mean, I'll declare everything. I go super conservative.
But you have to report in January that every one of these people got paid certain amounts.
Oh yeah. And dude, I do meeting minutes. I've got the book over there that my attorney and CPA told me to get.
You're just pointing at a bookshelf. We don't know which one you're talking about.
It's all the way at the right on that
we'll
shelf.
Never find out. Okay.
I'll show one of those books, one of those really boring books where you have to keep meeting minutes and you have to keep all this nerd stuff to be an S corp.
Well, I know we're running out of time, but we just scraped the surface. But I would like to give you an idea for another podcast at some point in time.
Give it,
especially with the type of business you're in.
This is like really leaving your sweater behind to come back and hook up.
Yeah, toothbrush. Sales tax.
Okay.
And how you report and how you collect sales tax in every state. So if you guys are doing things in Georgia or Oklahoma, there may be different rules, and you would still be subject to some sort of reporting out there. There's a lot of tax issues, not only in sales tax, but income tax for what we say an internet-type business, and that's cutting-edge stuff. I mean, it really hasn't been determined yet. It's in the Supreme Court right now, but I think you could have a whole topic and a whole hour on what to think about.
So services not taxed and not sales tax in Florida. If the contract for us, because we're a client contract, I'm your area, I think that's more e-commerce product-based is where it gets really tricky, right?
Tangible items.
Right. A service-based like ours, if you're a graphic designer and stuff like that, not as big of a deal because our contracts are wherever the state's located in the contract, right? But yeah, that is interesting. I've been on the e-commerce side with that, and it can get a little tricky.
It can get real tricky. We haven't even seen it start yet.
Yeah.
Especially now with the revenue crunch the states are going to have.
And where are you technically located?
They're coming after you.
Yeah.
You have a business nexus. That's we could have an hour topic on that.
Yeah, if I have a VPN that's located in Denver.
Or let's supposing that, this is all e-commerce and you send it over the internet, but then you send them a copy on a CD.
Yeah, we went through that with
DVD. Did you just not
video.
convert that tangible product right now? Now, the state of Florida is pretty much, we've been through those tax fights already. I was involved in that, by the way. And they've ruled that just a nominal amount sending out that isn't subject to the tax. But that doesn't mean that Georgia or Pennsylvania has different rules.
Know your states, people.
And you could have them coming after you, and all of a sudden you're barred from doing business in Pennsylvania. And I was never in Pennsylvania. So there's a lot of state tax issues if you're running a national business and over the internet to the different states. It's a fascinating topic.
I had a client, the Gaily Grind. We made an e-commerce store for 6 million unique visitors a month, and I was going over that with him because he wanted to sell some not so.
Did you say gay?
The Gaily Grind. It's a gay blog.
Ah,
yeah,
that's what I thought.
I've never shown you that. And you wanted to make an e-commerce store. Guess what was on there? So I appreciate you coming on.
My pleasure. That's really fun. Goes by
and
quick.
If anybody's looking for a good accountant, Scott Nelson.
You got
Nelson McKay,
Do you have anything to plug,
CPA.
like website or info or any of that? Email?
Well, I do.
He's going to read off of his business
I think
card.
professionally, I'm supposed to tell you this. And the name of our company is Nelson McKay CPAs. We've been in business for 36 years. Our address is 5422 Bay Center Drive, Suite 130, Tampa, Florida. And our telephone number is 286-7946. Before acting on any of our discussions today, please talk to your tax advisor and try to implement it in your own personal situation.
Yeah, this is an entertainment show masked with information, but legally we can't advise or something like that. I don't know. We need a disclaimer at the top of the show. But I appreciate you coming on.
Thank you. This was entertaining for me.
Yeah, and say what up to Rich McKay for me, your partner, and we'll exit on a little Simple Man again. Mm-hmm.